So when, why, and where do I want to see speed above or below certain levels? Okay, I'm going to lay the foundation first, and then we'll go and look at some examples. So when it comes to expecting speed above certain price levels, it's two or three main things that I'm looking for. All right, I'm going to try to make it as simple as I can. If I already have a target in place, let's say buy side liquidity above this high, that's my target, that's my drawn liquidity, this has all my focus, I'm aiming for this high up here. If we have any other highs like this high here, like assume I got long, okay, assume I bought something down here, and my focus is up here. Any highs that are before this high up here, I want to see speed above that. Why? Because I don't want to see us take out this high and then start to work lower. My focus is up here. Same thing with this high here. I don't want to see us take out this high and treat it like a turtle soup and start to retrace lower. I want to see us blast through this high, blast through that high. Why? Because I'm targeting lunch highs. This is my main focus up here. So that's reason number one. If there's any other high or liquidity before my main target, I want to see speed above them. I don't want to see us play around, stall around, take out the liquidity there, and then break lower. We need to aim for lunch highs up here. That's number one. Number two, if we have a retracement, something like this, remember, our focus is up here. Whenever we have a retracement like this, when we drop down into a fair value gap, we could be dropping down into an order block. We could be dropping down into a new day opening gap. Whenever we have a drop down like this and we start to leave it, that high that we just left in place, we need to rip through that. All right. There's no reason for us to drop down into a discount PD array and then stall around this high. So every single time I'm in a trade, you're going to see me say, okay, we drop down to a fair value gap, drop down to an order block. Now we need to rip through this high because our job down here is finished. Okay, we don't need to take out this high, stall around, come back, order block. We've already traded into a discount. We need to rip through that. Okay, and we bought this, I believe, we took this trade in the live stream, and I'm pretty sure I said I wanted to see speed above this high, and then we ripped through that. So that's reason number two. If we ever retrace, like a short-term retracement into a discount PD array, you want to see speed above that high. All right. And then third example or third reasoning, let me see if I have it in here. Well, we'll just do it like this. Okay, this is perfect. It's based on price action. All right. So assume we have a breakaway gap, aka something like this here. Okay, consolidate, taking out sell side, massive fair value gap, right? If we have a breakaway gap, I'm expecting speed once we drop into it. Why is that? Well, everybody knows when it comes to breakaway gaps, I want to see them stay open, or I want to see at least the lower half stay open. So once we form a breakaway gap like this and we open on this candle, trade down, we fail to reach consequent encroachment. Once we wick down and start to come back up and this candle closes, once that next candle opens, I'm telling myself, okay, right there, I'm looking for speed. I want to see us start to go higher. I'm looking for speed higher. I want us to rip higher. Why is that? Because if we're expecting this to stay open and we've already traded down, failed to reach consequent encroachment, in my mind, there's no reason to go lower. There's no reason to come back down here. I don't want to see us come down to the order block. I don't want to see optimal trade entry here. I don't want to see us come down to a discount between this low and this high equilibrium. I don't want to see that. It's a breakaway gap. We've already traded down near midpoint and closed here. The job is finished. There's no reason to continue going lower. I want to see speed now. I want to see us rip through that. Buy side above this high. This is an example I just found on the fly. This wasn't even supposed to be part of it. All right, same thing here. I want to see speed above this high. Why? My main focus is this high right here. So I want to see us rip through that. See this large candle exploding through that high. Buy side. All right. So now that we laid the foundation a little bit, let's go back at our examples. So 3 scenarios, I'm looking for speed. If we have liquidity pools and highs before our main target, I want to see us rip through that. If we ever retrace down into a fair value gap or order block, any kind of PD array, whenever we get a short-term retracement like this and we leave a high in place like that, we need to blast through that high. Okay, that has no significance. I don't want to see that take us lower. We need to rip through that. All right, and then again, the third reason I'm looking for speed, It's just based on price action alone. If we have a breakaway gap, I'm not expecting to fill in. Well, if we trade down into it, we need to leave it. We need speed. All right. I need some water. Hold on. I'm yapping. All right. So let's just go through some quick examples where I want to see speed. Hopefully it's making a little bit of sense. But we went long here in the fair value gap. Okay. We dropped down. Okay. If we ever form a short-term high like that and our bias is bullish, we're looking for lunch highs this day. I want to see us rip through that high. There's no reason to stall here. We get the speed that we like to see. And there we go. All right, right here. We also took this trade in the live stream. I want to see speed above this high. We have a low, high, lower low, taking out sell side. Where's our focus this day on Wednesday? We're looking at equal highs. Okay, I made that video about Caleb's model, the 2024 mentorship model. Our focus was these clean highs up here, meaning what? Right here. I want to see speed above here. Okay, if you remember in the live stream, we took out this high and we get this candle immediately trending down. I said that was a caution sign. I don't want to see us take out this high and then stall around. I want to see us rip through that. The same thing through this high. I want speed. Why? Because our focus is up here. This is our focus. So we don't want to take out this high, retrace, rally up, take out this high, retrace. We're looking for this. All right, so I want to see speed here. I want to see speed here. And the same thing, remember, if we ever trade up, leave a short-term high like that, and then trade back down into a discount PD array, a fair value gap. This could have been an order block. We could have traded back down inside of a breaker, whatever the case may be. If we retrace on a short-term basis like this, and we leave that high in the market like that, right there, I want to see speed above that high right there. Do we get that? Absolutely. We don't stall around. We don't take out that high, then retrace again. There's no reason to. We already did the dirty work. Look at the bodies respecting consequent encroachment of the fair value gap. Okay, our job is finished down here. So once we start to leave, we need to rip through that high. Why? Again, our focus is up here. So that's why I say I want to see speed above this high, because I have my mind and my eyes focused on this right here. And that's what we get. But another example here where I want to see speed. Okay, I took this short in the final hour macro. A lot of people ask, what was I basing the short off of? Consequent encroachment of this wick. Okay, wicks are fair value gaps. So we have this wick here. I'm seeing that as just a normal fair value gap. If you don't like that entry, then you could just use the inversion fair value gap here. There's nothing wrong with that. But we have that there. Fair value gap. I go short. Now, we have a short-term retracement into a premium array, okay, which is the wick, which is the inversion fair value gap. As we take out that low, I want to see speed here. I don't want to see us take out this low and then retrace back to the order block, retrace back to the inversion fair value gap, retrace back to the wick. Once we take out this low, I want to see speed, and I want to see us rip lower. Right here, okay? Maybe the Discord can help out with this stream. I'll figure that out after the stream. Sell side is the focus, okay? I traded this on my phone. You don't need, in my opinion, well, I don't need a laptop or a daily chart when it comes to trading the final hour. It's just understanding liquidity. So my focus was down here. Okay, I wanted to see speed underneath this low, which is why I had my buy limit, my take profit set about right here. I was only aiming for a quick like $100. I was out shopping and doing whatever. So I wanted to see speed rip through that low. All right. I don't know about y'all, but that looks like speed to me. And then sell side target hit here. So again, the rules still apply. If my focus is down here and we have liquidity here before my main target, I don't want to see us take out that low and then retrace. I don't want to see optimal trade entry here. I don't want to see us retrace back to equilibrium. I want to see this low taken out and rip through. Sell side target there. All right. And I think that may be the last one, if I'm not mistaken. Oh, nope. Never mind. All right. This is pre-market on Friday. We have a high here. We trade down, clearing out sell side. Once we get back above that high, I want to see speed there. We get it. Okay, this was once a bold green face candle. That's what I want to see above this high. Same thing here. I want to see speed. Why? If you remember Friday's stream, we're focused on these equal highs up here. Okay, that was our drawn liquidity. This is what we're focused on. We have a short-term high before we get to that buy side. I don't want to see us take out that high and retrace down to the fair value gap of the order block. I want to see us rip through that. Okay, we take out that high. A couple minutes later, this is the speed I'm looking for. This is what I want to see in price action. And then buy side taken out. Let's see. And then last example here. All right, I also took this trade during the final hour. Okay, clean highs. Buy side target up here. So if my buy side target is up here and we have a short-term high just before reaching that buy side, same rules apply. I want to see speed above this level because my focus is up here. Take all this off. I'm also looking for speed. This is the same thing. Notice how we form a short-term high right here. I'm going to zoom in real close. We form a short-term high right here. We retrace back down into what? A fair value gap. This is institutional order flow entry drill. If we're bullish, notice how we've been leaving fair value gaps open, breakaway gap. Okay, fair value gaps left open. This fair value gap left open. That signs a bullish order flow. So this candle opens, trades down, closes, creates a fair value gap. This candle opens, trades down one tick inside this fair value gap, and then starts to run away. We form a short-term high here on the retracement down to a discounted PD array. Once we start to leave, I'm telling myself I want to see us rip through this high. Rip through it because our focus is buy side up here. And then obviously, take profit got smashed, and there's a speed you're looking for. That's pretty much it. It's not anything crazy. It's not anything like secret or anything. It's just understanding your drawn liquidity and where you want to see price quickly reach for that. That's all it is. Appreciate y'all tuning in, man. Take your time out of your Saturday. Not a lot of people are willing to wake up on Saturday morning and listen to an hour-long webinar, but you guys are taking your education serious, and that's why we're all going to be profitable, and we're all going to make a lot of money in the upcoming future. All right? Love y'all, man. See you in the market Monday morning at 9:30. Not pre-market. All right? 9:30 Monday morning. See you then. Peace.